If you're a tradesperson, HMRC is actively looking for people like you right now. One wrong entry on your tax return could cost you thousands in fines. Stick with me, because I'm about to walk you through exactly what's changing and how to avoid getting caught out. Welcome back to Pension and Benefits Guide, the channel where we break down confusing tax and money rules into simple, practical advice you can actually use. Over the years, I've worked with thousands of tradespeople, sparkies, chippies, plumbers, builders, and I keep seeing the same mistakes again and again. Some end up fined. Others quietly overpay HMRC thousands more than they ever needed to. So let's go through the mistakes HMRC is watching closely right now, and how you can steer clear of them. First, imagine you've had a quiet month. No subcontractors, no CIS payments, nothing to report. So you send HMRC nothing, because why would you? That decision could soon cost you money. From the 6th of April, 2026, contractors under the construction industry scheme will need to submit a monthly CIS return, even if they haven't paid a single subcontractor that month. A quiet month is no longer a month where you can do nothing. This matters because since around 2015, plenty of contractors have gotten used to submitting nothing during quiet spells. It's become the norm. So it's easy to see how someone just carrying on as usual could suddenly face penalties, not because they're avoiding tax, but simply out of habit. Unfortunately, HMRC won't see it that way. Miss a return and penalties start at £100. Leave it outstanding, and after 2 months another £100 gets added, climbing further over time. What looks like a 5-minute admin job can quickly become expensive. So don't assume a quiet month means nothing to file, because from April 2026, that assumption becomes costly. But the next mistake is potentially worse, because it can affect every payment you receive for years to come. Let's talk about gross payment status. If you're a subcontractor with this status, it's one of the biggest advantages under CIS. Normally, contractors deduct 20% CIS tax before paying you. Invoice 10 grand, and you might only see 8 grand upfront, the rest going to HMRC. You get credit later, but that doesn't help when wages, materials, fuel, and insurance need paying today. Gross payment status means you get the full amount, giving you healthier cash flow, which is exactly why losing it is such a problem. Here's where it gets more concerning. HMRC now has stronger powers to cancel gross payment status if they believe you knew, or should have known, you were involved in fraudulent activity. Those words, should have known, matter because HMRC doesn't need to prove you created the fraud. They can argue you ignored warning signs. You might not be committing fraud at all, but if you should have noticed something wasn't right, that's a much lower bar for them to clear. Picture working with a new subcontractor. Everything seems fine at first, but little things don't add up: a suspicious business address, invoices that don't quite match the work, payments requested into unusual accounts, prices lower than anyone else in the industry. None of this alone proves fraud, but together it might be enough for HMRC to argue you should have asked more questions. If they reach that conclusion, you could lose your gross payment status, and getting it back isn't quick. You could be stuck under CIS deductions for years, putting real pressure on your cash flow. The lesson isn't to suspect everyone, it's to carry out sensible checks and not ignore warning signs. The next mistake isn't about losing money to fraud, it's about handing HMRC more than you need to. Let's talk mileage. Claiming it isn't unusual, but poor record keeping can be costly if HMRC ever asks questions. One of our clients, a carpenter, faced an inquiry into his mileage claims 3 years after the expenses were incurred. Try remembering every business trip from 3 years ago, most people couldn't. Luckily, he'd kept a simple Excel log: date, destination, reason, and mileage. HMRC checked it against his diary, invoices, and postcodes, everything matched, and the inquiry closed. HMRC doesn't expect a perfect memory, they expect evidence. Here's another reason this matters. From the 6th of April, 2026, the approved mileage rate rises to 55p per mile for the first 10,000 business miles, then drops to 25p after that. Still claiming the old 45p rate out of habit? You could be shortchanging yourself. Drive 8,000 business miles a year and claim 45p instead of 55p, and you've missed out on £800 in allowable expenses. Remember, not every journey qualifies. Traveling between customers or sites usually counts, but your regular commute from home usually doesn't. Keep a simple mileage log as you go, so if HMRC ever asks, you've already got the answer. Before we continue, if you're finding this useful, hit like. Subscribe if you're new, and drop a comment on which of these mistakes surprised you most. It really helps this channel reach more tradespeople who need it. Next, buying tools and equipment. Everyday running costs like drill bits and fixings are usually straightforward. But bigger purchases, a laser level, specialist machinery, things you'll use for years, are often treated differently for tax. Don't panic, you likely won't lose the relief. Often it comes through the annual investment allowance, letting you claim sooner than expected. The mistake isn't buying the equipment, it's guessing how to treat it. Ask yourself, will I still be using this to earn money in a few years? If yes, take 5 minutes to check the tax treatment. It's easier before you submit accounts than to unravel afterward. Now, clothing, one of the biggest arguments tradespeople have with HMRC. I only wear these for work, surely I can claim them. Understandable, but HMRC doesn't ask if you only wear something for work, they ask if it's specifically required for the job or could pass as everyday clothing. If someone could buy the same trousers or hoodie to wear on a Saturday, HMRC treats it as everyday wear, even if you'd never wear it off-site. You've got a stronger case with things that exist purely because of the job: safety boots, hard hats, gloves, safety glasses, and branded or high-vis clothing. Before buying something for the business, ask, is this protective or specialist, or just normal clothing I happen to wear at work? Next, a change about how you'll keep records, making tax digital. I get it, learning new systems isn't top of anyone's to-do list. But leaving this too late is a mistake. From April 2026, qualifying sole traders and landlords must keep digital records and send quarterly updates to HMRC. This doesn't mean paying tax 4 times a year, it just changes how often you report. The good news, digital record keeping is easier than expected. A spreadsheet works fine, or use an app. Many banks even offer this now. Snap a photo of a receipt, match it to your bank transaction, done. Keep business and personal spending separate too, it'll save hours of frustration. Set your system up now, while there's time and no penalties yet. Here's where the real impact becomes clear, and it's not about paperwork, it's about the people you pay to work for you. As businesses grow, you bring someone in, they invoice weekly, no payroll, no pay, everyone's happy. Or are they? Someone starts as occasional help, then before long they're working almost daily, using your equipment, your hours, your instructions, and nobody stops to ask if the relationship has actually changed. A big misconception, sending an invoice automatically means self-employed. HMRC looks at what's really happening, who decides how work gets done, who provides equipment, can they send someone else, do they genuinely work for others too? If it looks more like employment, HMRC could decide you've got it wrong, meaning unpaid pay, national insurance, interest, penalties, and unpicking arrangements that may have run for years. Don't assume you've got it wrong, just don't assume you've automatically got it right either. So to recap, CIS returns you might think you can skip, gross payment status that's easier to lose than regain, a mileage rate change many haven't noticed, tools and clothing that get miscategorized, making tax digital approaching fast, and subcontractors who might actually be employees. These are exactly where HMRC is focused right now. Which of these mistakes didn't you know about before watching? Let me know in the comments, I read every one. And if you found this useful, check out our video on how tradespeople overpay tax and the simple fixes to stop it. Thanks for watching, and I'll see you in the next one.